Cool. What up, everyone? Welcome back to Financial Education and Business. Let me actually turn this on, the volume up a little bit here. All right. All right. What up, everyone? Welcome back to Financial Education and Business. So, today's video, we're actually going to cover something kind of important. We've been getting clobbered on stock market, as you've seen, with the S&P, the Dow, Nasdaq, tech. Everything has been down, which is a little scary. The past couple of weeks, um, you know, this if you're in the AI sector, obviously you know exactly why that is going on, and most of it is because of uh, what's going on in the AI sector and what China has been able to do. Um, it is a little. Sorry, guys. Let me make sure. Cool. Yeah, it is a little scary though. Obviously, China is has been able to release a really, I guess, open sourced model, and this is kind of challenging the known in the AI marketplace, saying, listen, China is actually pretty close to how good the United States is in a way, and there is a chance that they are almost as good or maybe better than United States from aspects of performance and as aspects of expense per token. So it seems to be a little cheaper, and the open source open weight seems to be the best way to go. The open source allows you to just have this AI right on your computer, and you're going to be able to run it, and you don't have to go and ask anybody to do whatever. And you can train this AI to do exactly what you need, and that's the benefit of open source. And you don't have to hand over your information to um, another company, which is always something that which is something that a lot of companies want. And once again, Peter Thiel, CEO of the CEO of Palantir, has said, "Listen, companies are going to sell you tokens like OpenAI, Anthropic, and that's how they make the money is by selling you their tokens, and that's a problem. You need to be able to you need to be able to keep your data, and also um, you need to be able to keep your data and perform AI capabilities um, on the things on the products that you have to serve your customers, or even allow your startup to be more efficient." Um, and so that seems to be the main driving factor here. Is sorry, I'm trying to get this daily briefing to work. Um, and so that is kind of causing a problem here. Obviously, now because of this open weight Quinn model, we are seeing that maybe the United States is overinvesting. And in another way is, where the hell is all these trillions of dollars that have been invested into these AI companies gone? Like, where has Anthropic and OpenAI, maybe not Perplexity as much, but Google, Facebook, like, where is the money going when they have been fed, probably trillions of dollars or hundreds of billions in capex from each company? Um, are they, squandering their money into AI budget, um, when in reality that amount of money is really not, you know, that necessary to spend? And so this is a tough situation, you know, for them to be in, because um, now they're gonna have to figure out, okay, like, if we are overpaying for AI, then we're wasting money, and investors are gonna pull back, and not gonna hold or buy as many shares. And so in this video, essentially, that's what we're gonna do. We're gonna go over like what's going on, which I kind of already covered. But overall, we're getting beat up. I mean, you see some of the semiconductor companies doing really well. You see Nvidia did well, AVGO, MU, Intel, AMD, Microsoft, Google, Meta, didn't do too bad. It held up pretty well, barely took any loss. Amazon also, had a great day. Overall, money did go into tech today, and out of energy, industrials, and maybe financials as well have gone down, and consumer cyclicals and healthcare have also taken a loss. And looks like money is did rotate into tech. And of course, this makes sense because now what this is saying is like, because of what Quinn said. I mean, the demand for their new Kimi K product is so high that they essentially have said, "Hey, listen, we have so much demand, so many people trying to subscribe to our products that we're gonna have to route the different requests people have differently, and the way our subscription works differently." Essentially saying, "Hey, we have so much demand that we can't serve everybody equally," and essentially they stopped new subscriptions. Um, and so this kind of indicates that there is still significant amount of demand, and this demand could continue to drive AI investments for a lot of companies in the United
Ça va,
States.
Sancho.
Um, and I do I think it's gonna slow down? I think it's kind of tough to say if it's gonna slow down anytime soon, just because of the demand. And this demand isn't just like commercial companies. When it comes to AI, it's no longer just like um, it's no longer about what a Google or Facebook wants to do. Um, it's more than that. It's what does the government want to do? Um, what does the United States wants to do, and how do they want their products, their technology to be proliferated across the world and used by um, people for their daily usage for any scenario that they need it for. And so because of that, the demand will continue to increase. More and more investments will continue to increase here in the United States, as the United States wants to be number one in the AI race. They do not want to be last, and also they don't want to be the second best AI nation in the world, and they don't want the world to be using Chinese AI, relying on Chinese data, and also the United States consumers relying on Chinese AI models. This all happened because, if you're not following the AI race, this all happened because the United States government essentially told Anthropic to shut down their Fable 5, I believe, and that kind of caused a ruckus. Uh, and because it seemed like Fable was so good that the United States government decided, okay, if we let people use Fable, then there might be some security issues, and maybe they were saying it was too strong of a model, that it caused like cybersecurity risks, and so the U.S. government decided to pull it back and kind of reduce its capability and put guardrails around what it's capable of. And that's when they decided, okay, you know what, they released like 4 or 5 different versions of Fable 3. I think it's 3 different versions of Fable 5 for consumers, and these models are capable to do different things, and cost per token is different for all of them. And so what this did was it kind of opened up the market for companies in China to kind of step in. and um, show their strength in the open source model, because it seems like um, when it's a closed source model like this, a lo- there's a lot of risk for companies who are wanting to use these models. One, it forces them to give up their data, um, to give up their data to these companies, and that is definitely a problem, because if I have a business and I have all this personal information about myself, I don't want to give it to a company. I would like to keep that data to myself and take that capability and do different types of, or build different types of AI model capabilities on that, I guess, a proprietary data that I have. Think of this as like banks. They have a whole bunch of proprietary data. Um, Entrepreneurs, they have a whole bunch of great ideas, but they don't want their ideas to go to like um, OpenAI or Anthropic, because what this could allow is, it could allow Anthropic to just steal this entrepreneur's idea and come up with their own version of it. And so obviously there's historical evidence for this, where Microsoft essentially stole a whole bunch of ideas in the past, because they allowed, people were building stuff on top of Microsoft, and they end up just stealing that idea and making it, a product of subscription. So, anyways, all that to say, because the United States just went against this Fable 5 product, this opened up, another market, um, another market in the world for China to step in and fill the gap that was kind of void there. And so it is really interesting that now the U.S. is finding itself at a turning point where they need to decide, okay, do we make our products open model, and how do we make it cheap enough, and also and also capable, while also not risking the whole cybersecurity side of things. So because this is going to be, because things are political in the United States, it can be a little hard for things to move that fast. Most of the time, um, it takes the United States forever to do anything. So there's a potential that China could be ahead a little bit longer, um, or could be just as good as we are, and eventually we could catch up to them, or we have to release our own models to allow individuals to use some kind of open source model that's almost just as competitive, as good as, or better. So what does that mean? When you have an open source model, obviously there's going to be more demand. More demand equals more investments, more ideas, um, uh, more ideas, and that all is going to come down to, I mean, two two things. All this demand that's going to get generated, not only from entrepreneurs and existing businesses and governments, um, such as, when you think of governments, think of like sovereign AI, and this whole idea of like a country doesn't have the investment scale to be able to build out, you know, the number of GPUs that we have been able to build in the United States. Think of China, maybe South America. Sorry, think of Africa, South America, maybe even Australia. The government is not going to be able to invest that much money as we have, but they want to be able to stay at the peak of AI and use the technology, and they're going to be able to, use like a cloud-based AI, sovereign AI, where it allows them to keep their data in a bubble and be able to use the capabilities that we have been able to build. And when it comes to sovereign AI, that's going to also generate a whole bunch of demand, a ton of demand. So all these demand is going to create a couple things. AI is going to, I guess, cause significant amount of cybersecurity risk. This is obvious. Like the fact that I can get online and code, like find to figure out a way to hack um, a company it's so much easy for me. Like I'm not saying it's easy now. I'm not saying I know how to do that kind of stuff, but in the past I wouldn't be able to just get into ChatGPT. I mean into yeah, Gemini or ChatGPT and just code some program to create a way that I can hack into a startup, a health company, governments. But now I can do that myself. So what this does is because I have this capability, these these companies, the United States and nations are going to have to invest heavily into their existing infrastructure. Um, it's they're at the point where the existing companies and governments can't just sit around and not play ball. If they don't choose not to play, the cybersecurity risk becomes even more and more significant. And therefore, they don't want that to happen. And the only way that they're able to fight back against AI based cybersecurity is to play ball, is to invest money um, and invest in infrastructure. And most of the time, because these governments don't want to just give up their data, well, they're going to have to build maybe buy into sovereign AI, but also build infrastructure for it, such as power and cybersecurity defense. So, because this is going to be important, I think these are the two, I guess, um, the two important bottlenecks that are going to be in demand as we move forward is going to be AI security, cyber stopping cybersecurity threats, and power demand. Because now you can't. The reason I'm saying power demand is going to be important is because you cannot afford for your for entire gigawatts of power to go out at all. What does this mean? Well, imagine you have cybersecurity that is running um, the government's operations and doing scanning for cybersecurity threats throughout the day, on the hourly, on the minute, on the second. And so as soon as you have all this power go out, well, that's opportunity for cybersecurity to come, for cyber attacks to come in and do whatever they want to do. So, and also, you have these gigawatts of GPUs that are running and allowing these agents to do their work and their tasks. So, if you don't have power, well, or if the power goes out, it's going to be a major risk to your nation. And because of this, I believe that power, once again, is going to be very important, and as well as energy. These two are going hand in hand. And one additional thing I want to add is like, um, I don't, I think that the whole thing, what's going on in the Middle East, the United States attacking um, Iran, Strait of Hormuz, like this is it. I think personally that this is not about Iran having anything. This is way more than a lot of people really think. Um, the United States has been able to have control, project power in the Middle East through nations like Israel. And so, this, as AI becomes an actual threat, um, the United States is trying to play this game where they want to keep control, but also not just um, project power, but they want to also now not only project power but also have real power through the um, control of energy in the Middle East. And if you have control of the energy sector, well, good luck to any nation that wants to compete with you. Because if you have infinite energy, you automatically win it. You essentially win the AI race because you can build as many GPUs, as many new data centers as you want to do, as you want to build, essentially. So this is why I think that why the United States right now is in the Middle East. They're trying to maintain control because when it comes to power, the United States is lagging behind, and demand for power is going to grow exponentially. And China, when it comes to like the amount of power, energy in the energy sector, United States versus China, China is I think 2-3x above what the United States currently has. And so because of that, we have to go in there and disturb the whole thing. And that will allow us to continue to develop the United States while slowing down the rest of the world so that they kneel to the power of the United States. At the end of the day, we maintain control of how quickly other nations are able to develop their AI industry. Once again, that the war, I believe, is about energy. And when you see something like Kimi K come out, an open source, and just completely destroy the United States AI industry, makes you wonder what is going on. But in reality, I still do think that we are fighting that war for energy hegemony. I don't even know if that's a thing, but to be able to have a complete control of the energy sector. Um, all right. So now, um, do I now I think I kind of covered what has been going on in the market, and so let's look at kind of what's been going on for the past couple of weeks. Some of these large companies, then maybe we will look at their charts as well. So let's start with let's look at a company like Meta. So Meta stock. So if we were to look at, actually, let's go to Google. Let's do it in Google. So Meta. So Meta stock was up, not long ago. If we zoom out 5 days, as you can see, they're getting beat up. This is a stock that was $683, now sitting at 640, $546. As you can see, it kind of peaked at 681, and it's just been going down. And this, you'll see this happening across the board for a lot of these um, the large companies. So let's look at NVIDIA, NVDA. So if we look at NVIDIA, as you can see, that was also kind of beat up. This morning, the market was up. I think it was up mainly the industry was thinking, well, there's going to be major demand for AI, even more AI build out. But then as you see, as the day went by, the market just kind of sold off, and maybe they're thinking it might be a different kind of outcome. You see a company like Nvidia, who's almost at the center of AI industry, um, they peaked at what is this? $235, and they've just been going down since that peak. There's a little recovery here in July, but not by much. I mean, we went from what 197 to 212, and now we're down to $203. Um, if we look at TSM, obviously TSM Semi, they are at the heart of the actual build out of the little components and parts and wafers and semiconductors. And so they actually manufacture the product, and they sit at the center of everything. And look at this company, the past 5 days, the market is thinking, well, wait, we might be overspending, or we might be way ahead of schedule, and they're kind of being a little fearful, saying, "Hey, we've in the United States or across the world, we've um, overinvested," and so that's why you're seeing the market just kind of take a dump on a lot of these companies. Once again, if you zoom out, further out, you're going to see these a lot of these companies do well, but in the short term, these companies are getting beat up. And what do I think about this beat up of the market? Essentially, that's this video. I think has it bottomed, or are we going to continue to see further downsides from here? Um, I think it's kind of hard to say, but seeing what's going on in the Chinese AI sector, seeing that they are building out some amazing tech, cheap, reliable, and effective AI, kind of makes you wonder. And I think maybe there might be, a couple more days of fear. But I think overall, in the long term, maybe the next, two, maybe the end of this month, maybe start of next month, we may see the market pick up again. And the reason I'm saying that is we're seeing this whole example of what's going on with Kimi. Um, as we're seeing, let me see if I can pull up a good article here. Okay, so as we are seeing these companies like produce, here's a good map right here. So here, essentially, this is a pretty good map of the AI, and this is front-end code arena. So Kimi K, in this example, is seeing that it's a capability to code front end, and is better than Claude Fable 5, which is Fable 5 is essentially considered like the United States top model, but it's also really expensive um, per token. And companies had to pay like millions of dollars to have access, and access to this model was only especially given to large corporations like Amazon, Google, Oracle, and so on. Um, and this is the model the United States decided to kind of take back. And so, anyways, um, we're seeing here that Kimi K3 is better in the front end code arena, which is its capability to design websites, so on and so forth. So it's ranked at number one. Then we have GPT-5.6, GLM. I believe that's another Chinese model. You got Claude Opus, and then you got Grok here. Um, so it is a little bit scary that you're starting this Minimax. I believe Nvidia, Quen. That's another, I believe, Chinese model. Seed. I think this is another Chinese model. Um, so you're starting to see that Chinese models are starting to kind of sit top of the at the top of the AI competitive industry. Um, so it does make you it does scare you a little bit. Um, and I think that because we're seeing this type of demand, this type of capability, there's going to be even more and more and more demand for AI related tasks, and I think that's going to create even more and more demand. And this demand is going to drive the entire and continues to continue to increase the growth of the industry. And I think the market is going to recognize, wait a second, so this company came out with a model, and they're able to beat the United States at a cheaper price, and the United States is gonna have to come back and come up with their own model, with a better model that beats Kimmy K, and it's gonna be a continuous, you know, competition. And so because of
Six
that,
months ago, I spent.
okay, I need to mute these. I think because of that, the United States is going to continue to invest. They're not going to stop. So yeah, Kimmy K, just being good at being able to code front end. And some people are saying, okay, maybe when they trained this model, they gave it specific capabilities. For example, they trained it to only be amazing at doing front end code. Um, and maybe to be able to do 4 or 5 things really well, but everything else is just terrible. And maybe that's the case, but it seems like from like front end coding, it is doing an amazing job. As you can see here, they're showing how well um, the Kimmy K did versus Fable 5. So generating this these websites. Ramen serves night website. As you can see, one is Kimmy, this one is Fable, and this is the website that Deep Sea Research, Tether, Theater Stage, Rucker presenting, Pressing Plant website, Haunted Hotel. I mean, you can see the difference. I mean, it really Kimmy does do a good job on the front end. It looks very attractive website. Um, the the site things on the website are animated, not just sitting there in a block. Um, and once again, this just could mean that they just decided to train the model to be, the best at one thing. So yeah, I think these websites that Kimmy is making are a lot better. It's way more. It's not as rigid, and um, and maybe even more interactive. And if it's cheaper, people are gonna definitely continue to use Kimi. So is this the bottom? Well, I think so. Um, I think that this is kind of the bottom of the loss, like the stock market to continue to dump. I think this is what I think, not financial advice. I could be way off, but I think if it's a good time to get in is now. It's probably a good time to start picking up some shares. I mean, you got companies. Where is like, mm, I think the finance companies have been doing well. So you got a company like SoFi. That is a great company that is totally getting hammered, and this is going to be one of the greatest financial institutions out there. And for some reason, the market is deciding to kick them in the behind, and it continues to dump. I mean, this was a what, $30 stock, now sitting at $17, almost cut in half, 35% down from year to date. What are we looking at year to date? In 1 year, we're looking at about 19% down. So if it is a good time to start buying some stocks, I mean, SoFi is definitely a pretty good opportunity. Yeah, TSM also, I think this company is, plays at the heart of the AI industry. Um, if we're looking at Power BE, this is Bloom Energy. This is another great company. They are at the heart of I guess the energy sector. They're able to produce some of the best technology when it comes to feeding power to these um, AI warehouses or data centers, and they've already secured a whole bunch of contracts with some of the largest companies in almost the whole world essentially. As you can see, the power of experience. Um, and once again, this is the bottleneck that I think is very important, is to be able to have efficient power that will continuously run these data centers. And you don't want to risk not having power. Um, and so yeah, so this is one company. Obviously they essentially energy platform for digital economy. They sell you all these models: ultra reliable, fast deploy, scalable in design, cost effective power sector. Another company around power is called Forgent. Forgent Power Solutions is also, I think, another pretty awesome company. They they essentially sit at work with a with companies in the AI industry, and they have some contracts already. As you can see, 1 year this company's up 32%. Year to date, about even. 6 months, 30%. 5 years, if you zoom out a little bit, this company is only up 14% after all the relationships and the innovations that they have gone through. So, from supply chain constraints to rapidly evolving technology requirements, electrical infrastructure has never been more challenging to navigate. Forgent is purpose built to develop solutions that optimize for lead time, performance, and cost. So once again, they are able to sell energy to a whole bunch of AI companies, and I think this is also, one that might be worth continuously looking at. Um, if you do believe that there is um, a demand, there is significant demand for power. Um, let's see if we can let's just take a quick look at their presentations, and you will see why I am kind of saying this company could be worth taking a deeper dive in. I obviously own some of the shares. They're pretty because I really think they are growing, and they have amazing partnerships already. So just to look at like their Q2 business update right here, financials Q3 highlights, revenue up 103%, pretty impressive. 3 month end March 31st, 2026. So essentially their EBITDA margin 96%, and then their net income up 132% adjusted. They are raising the fiscal year 2026 guidance. Robust fundamentals across their core data center and grid market, supporting sustainable growth, and then share gain that compounds our growth. Uh, Sequential margin expansion expected to continue in Q4. So they're essentially saying, "Hey, we're growing. We have amazing partnerships, and we're not going to slow down. We've booked partnerships for years to come." So as you can see here, this is their bookings. Their their booking from Q3 2025 to Q2 fiscal year 2020. Actually, yeah, from Q3 of 2025 to Q3 of 2026. That's 1 year. Is up 308%. So they went 212 million to 867, almost $1 billion in booking. Pretty impressive. So booking to bill ratio, defined as change in backlog versus period prior quarter plus revenue in quarter divided by revenue in the quarter. That's also up year over year, 101%. And then their backlog is over 1.2, 1 point, essentially $2 billion in backlog. So there's year over year growth in booking was high in Q3 than Q2, obviously. Then rising physical guidance. So they're saying, hey, we got a revenue in 2026. It used to be 753. They're saying they're gonna hit 1.3 to 1.35 to 1.39 billion dollars by the end of the year. So they're not ashamed to say, hey, we're gonna hit the billions of dollars in revenue because we're gonna continue to see demand. And companies don't just book all this demand if they think, wait, this AI industry isn't gonna grow anymore. Um, I personally believe that the entire industry in the build out really just tells you one thing, is that if I was a company like Microsoft or Meta, anytime I make an investment in the billions of dollars, I need to first make sure that this demand is going to pull for 5 to 10 years from now. I don't want to spend $20 billion to build a large infrastructure this year and then it's going to be gone next year for no reason, or because there's the demand that we expected wasn't there. I think there's very smart people that do the math out there and come out with these calculations that say, listen, if this demand for AI continues, this is the amount of money that we're going to have to invest pulling forward 5 to 10 years. And so that's why you have, almost a trillion, $700 billion, almost a trillion between five US corporations just investing into the AI industry in capex. Um, so this, anyways, I'm not gonna go through the rest of their numbers, but this company, Forgent Power, is pretty good to look at. Another company, I think, quite um, quite a volatile company, but also really is very interesting um, to look at closely, and which I've spoken about before, is this company called T1 Energy. And right now, T1 Energy is focused on building solar panels and being the United States' number one solar panel developers, and not just developing this for like, mm, not just developing the the for the next 4 or 5 years, but they want to be able to develop these solar panels for um, companies across and corporations and also homes across the United States, but they want to be able to build them at a very large scale in these huge warehouses. They have T1 Energy enters a, and then they also, we'll get into that, they're getting into this whole idea of like battery storage as well. Well, if they have solar panels that create energy, to be able to be able to sell another pack and another business line that says, listen, here's the battery that you could use alongside our solar panel, is a great business opportunity. So anyways, but the main purpose of the company is to build solar, to be the number one solar panel manufacturing at a scale in the United States. And they are focused on specifically building energy um, using products and equipment but in the United States. So nothing sourced outside of the United States. Obviously, that gives them some eligibility to use some government funds, I believe, and maybe even good credits. And that's why they're doing that. But I think it's very smart. As you can see, they have one spot in Texas called G1 Dallas, and then they have another spot that they're kind of under construction right now. It's called G2 Austin, and they have been dropping videos and as they continue to build out this center. I think it's supposed to be up and running by the end of this year, so definitely looking forward to that. So this is essentially where they build out their solar panels. And once again, solar panel gives you unlimited energy from the sun. And if you start, taking these massive lands and building out in- infrastructure to capture the sun's energy, that could be almost unlimited power. Um, that's gonna save you billions of dollars from just investing in um, gas or some type of other mechanical energy or coal and whatever not. But I also do think that the leadership on the team, I've covered this company so you can go look at them. I also think the leadership is pretty decent on here. T1 Energy to enter a um, BAS and data center best estimate something. What does BAS stand for? There it is. Battery Energy Storage System. Yeah, battery energy storage system and data center infrastructure markets with acquiring core. So, which is pretty cool. They're expanding their business. And this is how small companies grow. Once again, T1 Energy is not that big. 2.6 or something $1 billion market cap. 1.68 billion-dollar market cap company. Once again, this company has run significantly 300%. But if they continue to do what they have been doing, I believe they're going to be just fine. T1 Energy, who else here? I think, oh yeah. Um, I think there is going to be another company to kind of still in the AI industry. I think as AI continues to become, pretty impressive, I think there's going to be another thing that is kind of going to become really important. Is called is essentially robotics. Um, so let me see if I can find. So I've been saving, a whole bunch of stuff regarding robotics. I just think that in the future, we're gonna have robots of all types. And one of the things that's gonna be important for these robots is um, their capability to sense the world around them or to see the world around them. And there's one company in the United States that's been doing an amazing job at building out LiDAR, being able to not build the robots themselves, but to be able to give the robots the LiDAR that they need so they can sense and see the world around them and navigate accordingly. So 36 robotic stocks to know. Yeah. So robot automation, medical robots, industrial robots, and then defense robots, logistics, so on and so forth. Um, I think um, all these robotics companies are going to rely on AI at the edge, um, and also sensing to be able to see what they do. And so this company essentially builds out their capability to see things and selling these lidar sensors, which I think are pretty impressive. So what we're looking at here is a product that they have called Rev 8, and this is not a camera. The light and everything else is coming from lidar. And one thing that's kind of important here is when it comes to um, activities in the real world, how robots interact, how traffic lights work, how traffic works, specifically like um, how do you develop essentially a whole new industry, just removing the camera portion of how we currently see things the way we currently see things operate. It's pretty impressive that they're able to not use a camera but come up with something like this. It's pretty amazing. It makes me think of what Elon and the Waymo Robotics are kind of going through. Elon believes that, you know, cars can drive with cameras, but Waymo believes that cars need cameras and LiDAR. And so this company sits right in the middle of, hey, you can have both of best of both worlds. You can have a camera like LiDAR that lets you capture what's going on around you. And in some ways, LiDAR is better than camera. In other ways, camera is better than LiDAR. But at the end of the day, this this seems to be the way that robotics are going to be operating, and this company is sitting in the middle of that. And obviously their products have been used by military, by in the World Cup, specifically at the stadium, and as well as their products are being used by, I think, every single Waymo that's being driven around out there. And so obviously that is pretty impressive. um, Once again, as Waymo is a Google product, I think that autonomous driving is going to be, I mean, self-driving cars are going to just be a thing, and they're not going to go backwards until, you know, they all start crashing into people, whatever. But I don't think that's going to happen anytime soon. And so, because of that, I think that as the demand for self-driving autonomous robots, edge AI, continue to grow in demand, I think this company is sitting at the middle of that. Um, but while wait, while all that is important, there is a company here that I think is worth looking at. They go by AMBA. So this company is pretty impressive. Once again, they are, I said, AI at the edge. AI at the edge essentially is, wow, it's a 52-minute video, whatever. AI at the edge is essentially like, when it comes to decision making, these AIs, AI executed tasks at certain times cannot wait 1 millisecond, because that delay could be life and death situation. So because of that, I think that you need an AI, I guess, a company that's building out these very low latency AI chips that enable AI at the edge to be very functional. So Umbrella declined over the past month due to growth stock sell-off and heavy valuation scrutiny. However, strong Wall Street endorsement and its distinct physical AI pure play labels have revived interest. Um, so name a top pure play selection. So let's go. Let's go. Okay, Umbrella is an American fabless semiconductor design company focusing on low power, high definition, and ultra high definition video compression, image processing, computer vision processing. Umbrella's products are used in a wide variety of human and computer vision capabilities, including video security, advanced driver assistance systems, electronic mirror drive record. Oh, recorder. What's a drive recorder? Driver and in-cab monitoring, so on and so forth and so forth and so on. If we go to the company, we're going to see that they are able to they found out a way to build these chips that um, enable enable these AI robots to be able to make split second decisions essentially, and these chips operate at the edge and can function without the need to send data to this data center or cloud. And the important part of that is because, let's say I'm driving and the person in front of me hits the brake really fast, or there's a oncoming car, um, and I'm sleeping in the car, or whatever, or I'm riding in the back of the car. Well, the data sometimes doesn't have enough time to go to the cloud, come back, and then make the decision. The car that is driving you, the self-driving car, has to capture the video and make the decision right there in the car. And so that's why a company like Umbrella is very, very important when it comes to that. With advanced driver assistance systems, smart electric mirrors, drive records, an autonomous vehicle, and more, Umbrella is committed to preparing you for the road ahead, essentially. Here it is, the products being used in airports. And it's, I guess, smart surveillance solutions. Um, let's look at their products. Security, consumer, technologies, applications, technology and development products, automotive, security, consumer, IOTA, so Internet of Things, industry, robotics. So I wish they are able to show there is, here they are. So these are their chips. The Umbrella C7, CV7, 8K image processing, Umbrella. So these are all the different chips that they make. And essentially this allows you to program around around the chips to be able to, you know, build out your AI car or robotics that allows it to um, capture a video, take that video and make decisions right there within the car, which is I think pretty awesome. Automotive, once again, they build these chips. Once again, chips are at the heart of everything. Um, so there's just these are all the ways they make their money, and it's pretty awesome when you see a company that is that was a whole bunch of products for sale, and they're at the peak of, at the front end of the most selling the most advanced technology. Yeah, they deserve some premium, and they will only get better in the current. Sometimes, like, gotta realize, like, this company is the worst it's gonna be. I don't think it's gonna be worse than this. Um, and as you can see here, in 5 years, I mean, if you held this company, it would be you'd be super mad. I mean, yeah, I mean, let's say you bought it at 86, it went down to 50, 45. The lowest it hit was like $43. But this company has been just consolidating for years and years and years, and it's just getting better and better. Imagine what kind of company continuously builds some of the best front, I guess, head of the spear technology, and yet their stock doesn't go anywhere. And something interesting is, if you look at, like, Robinhood, right? Robinhood was another company that, if you zoom out, this is a company they IPO'd. They continue to create some of the best technology, and failed and continue to develop. and failed. They consolidated in this $9 to $10, maybe $20 for from 2022 all the way up to 2024, maybe 2025. And from then on, they just took off. And it's the same thing if you look at a company like PLTR. This is another company that just IPO'd but then consolidated for years from 2022 to 2025 and just took off. And if you look at another company called SoFi, it's the same story. When there is an amazing company, you buy them and you just chill in the long term. What do you see? Well, SoFi IPOs, the stock goes down. It just consolidates for years. 2022, maybe mid 2022, kind of consolidates, kind of goes up, not really, until it's 2025 and on. The stock just kind of explodes the end of 2024 in this case, or August. So the last quarter of the year, it just explodes to the upside. And I think it's kind of the same, it's going to be the same story or similar story, not the same, when it comes to a company like I think it's probably the same story with Rocket Lab. I mean, let's zoom out 5 years. Look at this company consolidated from 2022 all the way to the end of August, and then from then on just ripped $100 to $135. So essentially, what the picture that I'm trying to draw here is that there are some amazing companies out there, especially in the AI sector, that are now, I think, gonna hit a peak. Not a peak, but they're at the worst that they are, and their demand for their product is actually gonna hit a second level of demand, a need for the next innovation. I mean, if you think about it, at the next, we live at this like crazy reality of we have robots doing backflips, a phone that is just talking to you, answers questions, like cars that drive themselves. Like, we live in this like crazy, crazy, crazy world, and technology is growing at the fastest rate that we've ever seen it. Robots doing backflips, cars driving themselves, phones talking back to you. Not doing phone calls, but an AI robot answering any question that you have, and being able to build you an app on the fly. That is pretty impressive. So, anyways, all that to say, I think it's pretty impressive that we are living at the peak of, seems like at the peak of the next industrial revolution. And you might want to say AGI, but what, when do you know you hit AGI? It's kind of hard. Like, when do you know we're at AGI? Um, there's, yeah, I'm not gonna get into that, but really is we are starting to see robots doing things, cars driving themselves, robots making their own decisions, learning from each other. And something that I just thinking about is like, once you train a robot to do this, it's not like you have to teach the next robot to do that. You teach this robot to do this, you've taught all the other robots to do that. That's like a different type of like technological advancement. The other robots don't need to learn from the start. They only start from the peak of the best robot and then develop from there. So this is one company, CCIX, Churchill Capital. They are going to SPAC this company, Agility Robotics. Obviously, Agility Robotics already has partnerships with Melly, Amazon Logistics, and already has contracts with them. CCXI already has contracts with them, and this company is going to be SPACing under AGL T, I believe, agility. So that's coming up. So you're gonna now have this robotics company in the United States that's gonna start 5 workflows DG can help you with today. So pretty impressive how AI could enable autonomous robot workers in workplace and maybe human. I don't know, something about human. So right now, I believe they are on the road selling the crap out of the company. Obviously, I did buy some shares. I may still buy some shares. I didn't buy a lot. I just bought a little bit. But they're SPACing. Uh, and right now, besides besides Tesla, this is one of the only companies that is actually doing this kind of thing. Just give me a second. I need to do something. Um, so, all right. So that is essentially my belief. Um, I mean, if we were to look, let me see what I have in here for robotics. Robotics fundamentals. Um, and once again, what do these robots are gonna need? They're gonna need um, some lidar so they can see, and the capability to be able um, to capture video and be able to capture a video and take that video, condense that video, make decisions right away. And that's them um, them having the capability to action with their videos and use the chips that we talked about from Umbrella, you know. So, anyways, so if we were to look at this, it says where human robots are actually deployed. So if you look at this chart, you're gonna see a couple things here. So Middle East and Africa, Museum of the Future. You got Latin America, they have two. Three, they have NT, they got availability is unknown. Um, Sorry, here you got the Agility Robotics um, exploring Latin America. China, you have this BYD Zeekr Robotics, UB Tech. They are not selling in North America, but they are Airbus early testing. And then in China, they have BYD. Um, Now in Europe, they have a couple of different things going on here. They got this robot made by the United States, Mercedes headquarters, I guess. They got China have UB Tech, which is in Europe, Airbus early testing. Engineered Art, once again, this is National Robotics Robotorium. Okay, and then a couple more here. And once again, look and compare what's going on here. Green is commercial deployment, and then the rest are pilots and demos. So in China, there's one commercial deployment. Europe has two commercial deployment. The United States has two commercial deployments, and then a whole bunch of pilots and tests of the Aptronics. We have the Engineered Arts. Canada's made one right here. Marx Magna, I guess. Palo. You have all these other robotics companies really just in commercial state and pilot and testing here in the United States versus what's going on in China and the rest of the world. And so this here is not gonna slow down. One interesting video to look at is robot fight. There's an awesome video of these robots fighting, which is I thought was an AI in the beginning until I saw the whole thing.
秒，我们的裁判已经在估了，现在的位置又加分了，的把控目前来说 OK， 哦，这家
这个白色雄鹰的得分区域取得，
但是我跟哦，你也哦，旋风腿当中的哇，这样的命中啊，哎呦，就是有点吓人，邓宁是不会又晕了吧？哇，正面，邓宁是不会又晕了，斗牛士受到重创，哦，斗牛士还能坚持吗？哦，又是正面的击倒，看晕了。单哥说还可以这样，
马上泪目了。
哇！雄鹰能回追吗？再踢到了一脚。
I just gotta say that it's pretty impressive. We're talking about you have people fighting robots like this. I mean, imagine like 10 years ago. I mean, this is in China, but obviously, like 10 years ago, we would not have guessed that robots would get to this point to where they're, in a ring fighting each other, losing their heads, and yet this is very scary and kind of futuristic. But you have these robots doing these crazy acrobatics. Um, it really makes you think we are at the edge of this technological advancement um, that is just started. And robots, I'm telling you right now, robots are going to be very, very important um, in the next playing field, especially when it comes to war and so on and so forth. Um, Obviously, these robots are controlled by people. But with time, they're only gonna get better. But anyways, all right, let's actually get into the topic here. I think we did. We kind of covered everything. Um, we covered, is this the bottom? We covered robotics. We covered Iran. We covered a lot. But I do think that we are starting to see a bottom. I don't think we're gonna keep going down. Um, I think the biggest mistake a lot of investors kind of make is they shut down thinking, oh wait, I'm gonna wait, time the bottom, and they mess up. It's better that when you see the market dump based on whatever kind of fear, um, for whatever kind of fear, it's gonna come back. You may not get the exact bottom, but it doesn't matter. You're gonna eventually, be win even if you bought it a little higher. Here's just a good example. In 2025, sorry, let me zoom out a little bit more. In January, it was well, and then we did the whole tariff thing, and the market dumped. If you bought every week or every month, you would have averaged from the bottom. So you would have gotten mid, let's say, you know, what is this, 40, almost 7,000, 47,000 on the Dow. What have we seen from there? We've just come right back up. And once again, you could have been afraid of what's gonna happen here. Um, let me see if I can get there. What's gonna happen here? We dump, and then what happens? We come right back up. And once again, we're dumping. And when it dumps like this, I always I always see these kind of like market downturns as like going to shop at my favorite store, and I noticed that a whole bunch of items are for sale, and the quality of the products do not change. And so it's not like all of a sudden in the past, let's say in the past month, let's say, um, yeah, let's say it's 5 days maybe. Let's go 5 days. It's not like all of a sudden the quality of the product is has gone down by 1.5%. I mean, just think of this as a single stock, maybe Nvidia or something. Um, if we were to zoom out, 5 days, we see this stock sitting at 213, and then now we're down 4%. Has the quality of Nvidia gone down by 4%? I don't think so. So that's why I sometimes kind of think the market is just short term, and um, I think that it's always better to just take these market dips as opportunities. If anything, we are getting close to bottom, and we're gonna continue to see demand in the AI sector. Have we invested a ton? Yes, but I think is not enough. I think in summary, this is not a game of corporations trying to do things. This is a game of governments trying to do things, such as, um, like I've discussed before, situational awareness, um, trying to be the first nation to be at the um, front of any new AI innovation or revolution. You don't want to be second to any type of AI innovation. You want to be first. You don't want to be the second company in building the best cyber attacking AI agent. You want to be the first company. And so, because of that, um, the United States government, not just corporation, government, are going to continue to invest billions, if not trillions, whatever it takes to be the number one company. And again, that's why I kind of pointed out that we are in the Middle East right now, because we have to be number one, and the second place country, the second place nation, is going to be ruled by the first place nation, essentially, because they have the capability to do a whole bunch of bad things to another nation just by doing some AI related cyber attacks. All right, I think that is all. Um, I really wanted to cover. There isn't really much more. Um, this video is already almost an hour 20 minutes, which is insane. Um, Maybe the last thing we can kind of touch on is how software companies are getting beat up. Um, just mega caps. Let's go to over 300 billion. Let's go over 300 million. over 10 billion. If you look at the performance charts of these companies, they have been specifically social media. Not social media, but software companies. You're gonna notice that they have been kind of beat up. Software companies, you have the Adobes of the world. I mean, if you look at Adobe past 5 years, they're down 61%. The closer you get, obviously is less, but like year to date it's 32% down. That's Adobe. In a month, obviously it's coming up because it's really beat up. And the reason obviously is AI related. Other software companies like Salesforce CRM is getting beat up as well. I mean, let's just go last year to date here. Intuit. I mean, look at Intuit. Just year to date, down almost 56% on Intuit. HubSpot, Team, it's also down. Atlassian Corporation, Oracle. Look at this company. This is one of those companies I really think is just amazing. They have the technology. They've been around forever, and they are in every single large corporation systems. Oracle's down. You got SAP, that's also down. Look at these numbers, 30 over almost each one here. Each software company here, I mean, they're down, at least on average at 30% year to date. The entire market is just getting beat up because everybody thinks AI is gonna replace them. I mean, if we look at recent downturns, the same month or so, look at IBM. IBM is beat up. It is a little scary. Like, would I want to buy? I own some IBM, but would I want to buy more? I want to buy more. But it makes you wonder, like, is this the end? Like, is this the last time it's gonna dump like this? But if you believe, the company has value, and their product is gonna, serve the AI industry with all the data that they have, it might be a great opportunity. What happened? The stock literally in one day went from a $300 stock dumped to a $200 stock, $204 stock, all because the CEO essentially during the earnings call said, the CEO essentially said, well, it seems like a lot of corporations are investing in AI and chips and not buying software. And because of that, it just literally just dumped. Look at this. Look at how insane that dump is. So anyways, I am kind of interested in picking up some shares there. Once again, it's another software company. Oracle also getting beat up. We have SAP, CRM, Roblox. I mean, never touch Roblox. I think it's a disgusting company that needs to go under. Zscaler, I own this company. This is obviously something I've always said is that cyber security, cyber related stuff is is really important. I don't think it's going anywhere. So, however, looks like this company is getting beat up. They think AI is going to replace it. Zscaler engages in the provision of cloud-based internet security platform. It offers zero trust exchange, Zscaler client connector, Zscaler internet access, private access, business to business, cloud protection, so on and so forth. They've been around since 2007. This company has gone through it. It's gone through the 2009 tech bubble, 2008 tech bubble, 2007 tech bubble. It's gone through every single wave and it's been able to stay where they are. Um, they issued some shares, as you can see here. Sales are doing just fine. It looks like they're saying trailing 12 months already way above what it was last year. Gap earnings are not too bad. They're saying maybe this year they may take even more of a loss. This company, obviously the ratings has gone down a little bit. Earnings came out, they beat. It didn't matter. The stock just dumped. So, anyways, if you're looking at a cyber related company, once again, that would be a pretty good company to look at. You once again, Unity Software. Unity Software, 7 next generation game authorizing platform. ServiceNow, I think this is also another great company to look at. Once again, software, and software is kind of the type of industry where a lot of corporations and are saying that not only corporations but a lot of investors are saying it's something that's not going to last that long. You got Wednesday.com and Workday, sorry, Wednesday.com, Workday, and once again, another software company getting destroyed. Um, let's see who are the biggest losers for the per month. So Oracle, pretty bad here. Oracle is getting beat up 50% performance for 1 year. And then just recently in the month, they just got destroyed. Like obviously IBM did, who's this? Synopsys, okay. MSTR, I don't know how they're in the software, but they are there. Saturday, Cadence, Cisco. I mean, Cisco is even getting beat up in the past couple of days. Let's look at Oracle. I think there could be an opportunity here, maybe. Obviously, the company's beat up. Oh my goodness. I mean, Oracle is valued back to what, May of 2025, but then like I mean that was the same price as where it was back in 2003, sorry, 2023. That's insane. And to be honest, New Mexico Land Commissioner again rejects key natural gas pipeline segments for power to Oracle's Project Jupiter data center. The one of the, well, it definitely destroyed this 50-day SMA. 200 is way down here. If it beats that, if it hits 200, that's insane. Then that would be like a $60 stock. So the problem with Oracle is they do have a how do you say the word, a bad image in a way, because of some of the relationship with nations. I think some people like that, some people don't like that, but you have Oracle here. They have cloud, multi-cloud AI data database, AI data platform, cloud custom, Fusion Health Suite, Industries, and NetSuite. They're saying that they're building the world's largest AI cloud, 1.2 billion watt Texas data center, 500,000 NVIDIA GPUs. Oracle Cloud Infrastructure. Oracle offers the highest performing cloud service at the lowest cost. AMD, ByteDance, Meta, NVIDIA, OpenAI, Temu, TikTok, Uber. The demand for cloud infrastructure for AI training and inference greatly exceeds supply. Oracle AI database, 200 plus data centers. multi-cloud and AI database. I mean, why wouldn't you buy this company? Um, I believe they own TikTok. Let me see. I believe Oracle announces equity and debt financing plan for calendar year 2026. Oracle chosen as TikTok's secure cloud provider. Yeah, but also like Oracle has, bad image in other ways. Um, but yeah, they're getting beat up. I think that is maybe it's for a good reason, maybe there's a bad reason. But let's go find out, why is Oracle getting beat up? Let's ask the AI, why is Oracle stock down so much? So Oracle has experienced a significant decline, dropping more than 60% for its all-time high and trading nearly a 52-week low. Sharp sell-off, aggressive AI infrastructure capital expenditure. Investors are highly concerned over Oracle's skyrocketing capital expenditure. The company outspent its initial target for 2026 to rapidly expanding its cloud and data center network. I mean, so they're saying surging debt and credit rating downgrade. They have 40 billion through debt and equity financing, and a $23.7 billion cash burn for fiscal year. OpenAI concentration and counterparty risk, 300 billion partnership with Oracle. So interesting. So essentially, what they're getting beat up for investing a ton of money into AI. If you think that AI is going to be the future and it really is going to change the way we do everything, I think the investment isn't bad. I think Oracle might be an opportunity here, to be honest. I don't understand why. Um, yes, it's scary. They're they're doing all this capex, but should they really be? Oracle's down 65 from sales at trading at just 21x earnings. It's one of the biggest opportunities in entire market. Let's listen to this real quick.
I think there's going to be many winners, and the good thing for us in terms of mitigating any downside is that the infrastructure these customers needs, while in some ways it's customized, is largely the same. And so really, when you look at the build out that's happening across the industry, it's a bet on the success of AI. Obviously, we have a great relationship with OpenAI, but there are many different customers that are all going to need this type of infrastructure for many, many years to come. I think there's going to be many winners, and the good thing
Sorry. Okay, so it seems like that um I was saying that OpenAI kind of uh, have the relationship with Oracle, and OpenAI essentially said, "Hey, we need capacity." So OpenAI concentration and counterparty risk, saying that maybe, you know what, OpenAI at the end of the day might say, "Hey, Oracle, actually we don't need you." And when OpenAI says that we don't need you, then all this money that Oracle has borrowed and built, all this infrastructure, is going to go into waste. So regarding the OpenAI concentration counterparty risk, a significant portion of Oracle's record-breaking backlog, including a landmark 300 billion partnership, is heavily concentrated into OpenAI. Let's see that. Let's open that. There it is. Wall Street is worried about the financial sustainability and partner risk associated with OpenAI, especially amid delayed IPO, rising legal challenges such as Apple's recent trade secret lawsuit, which kind of stops OpenAI essentially from building out anything physical, like a phone, so on and so forth. Apple thinks that OpenAI is stealing a whole bunch of employees, and also I think it's like 32 employees or more have left Apple directly to OpenAI. Recent infrastructure setback adding immediate pressure. New Mexico regulators recently rejected a vital natural gas pipeline permit for Oracle's Project Jupiter data center campus, developed jointly with OpenAI, introducing a fresh cost timeline concerns. Well, that is kind of a problem. So it seems like there's some setbacks. I don't know. I mean, could they get power or natural gas from somewhere else? Yes, they can. I don't think they have to rely on New Mexico. Man, this thing is terrible. On New Mexico. Yeah, so it seemed like it just seemed, yeah. So to quickly invest in Oracle shares dropped traditional after CLSA initiated coverage, adding to the bearish tone. Famed short seller Michael Burry clarified over the weekend that he had only covered half of his Oracle short position, not the full position, as some reports suggest. Blah, 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 not helpful. Okay, so I don't know, maybe this, like any other business, there's always like a short-term, issue for companies. And it is kind of scary that this partnership with OpenAI, Sam Altman, is not always very trustworthy. But Oracle is doing the right thing, building out for the long term. And I think there's an opportunity for them, whether the whether the like whether the government, whether OpenAI, tries to partner with them or not. So I don't think that's going to matter. The government is going to step in and I think help Oracle get the deals that they need. Pretty impressive. I don't know. I think, yeah, I really do think project is pretty good. Oracle debt is close to 8%. Insane to see. Being up today is like blah blah blah. Everyone's fearful of Oracle. That's when I buy. Yeah, I mean, this is one of those rules that Warren Buffett has. When everybody's fearful, you have to be greedy. Let's listen to this.
As I said earlier, these AI models are trained on publicly available data, all the data on the internet. So if you look at ChatGPT or Anthropic, Grok, Llama, what have you, they're all trained on all of the data on the internet. In other words, publicly available data. But for these models to reach their peak value, you need to not train them not just on publicly available data, but you need to make privately owned data available to those models as well.
He literally just said the obvious. So Chris is saying this is the slide everyone should be paying attention to when it comes to Oracle. Even with spending set to raise 70 billion net in 2027, the outstanding funding required will actually be 20% less in 2026. Why this is important? Because over the next 5 years, the intensity of CapEx will come down, but the cash flow from the sites will rise dramatically. This is very true. Because once you do the build out, hoping that you get there, then that means you make the revenue after the build out and you don't have to invest as much. All of that additional cash flow will drop to the bottom line of the enabling debt reduction, share repurchase, impacting EPS. Oracle's debt is mostly longer term fixed with low yield that are easily covered. Cash flows impale in compares to cash flow. It's like we see the tender offer for longer dated maturities with lower yield in 2028. The free cash flow will mostly go towards share repurchase. Net debt EBITDA will likely fall to 2x by 2029. Only question now is how much of the RPO is actually collectible. I don't know. Long-term financial outlook, CAGR, non-GAAP, CapEx, and funding expectations. So they're saying, hey, in 2026, they're saying, $48 billion. 2027 net cash outlay for CapEx, they're saying about $70 billion. So essentially they're saying they're going to spend more money.
Once we gene sequence that cancer tumor, you can then vaccinate the person, design a vaccine for every individual person to vaccinate them against that cancer. And you can make that vaccine, that mRNA vaccine, you can make that robotically, again, using AI in about 48 hours. So imagine early cancer detection, the development of a cancer vaccine for your particular cancer aimed at you, and have that vaccine available in 48 hours. This is the promise of AI and the promise of the future. Once we
kind of agree there. Let's go look at what's going on here with the boys. We'll quickly look at what Chris is talking about, and then we will probably try to end the show. But yeah, it looks like Michael Burry did close out half or some of the short.
As I said earlier, these AI models are trained on publicly available.
Let's see what the boys are talking about.
Me going crazy about CoreWeave. I did more research on it, start running the numbers. I mean, they're at an inflection point right now. This is quarterly revenue. 111% year over year growth with 99 billion in backlog and inflection point quarter over quarter right here. I think they're going to come in so much higher. It's going to be a true S curve. And when I layer in the EBITDA, because their interest expenses, everybody knows that they have a lot of debt. They just hit $1 billion in 3 months EBITDA. They are more than able to service their debt. And I think this completely converts into an S curve. So I think we're early on CoreWeave, and this is what I've been building out. And I was early on, let me get rid of the EBITDA. I was early on Nebius, and I invested in that at 80. But if you look at Nebius also, a fraction of the
Nebius at now? What is Nebius now?
is kind of crazy how CoreWeave is down a ton. I own CoreWeave. Um, I think definitely they are going to play a key role with, for companies to continuously build out their AI infrastructure around inferencing and training, as they essentially have the tip of the spear infrastructure for AI training and inference, and they use NVIDIA's products. Um, but yeah, great. Once again, CoreWeave's another great company to look at. That is, I think, like at the tip of the next level of innovation when it comes to like AI and infrastructure. Um, but yeah, I think these companies are the future mega billions, hundreds of billions of dollar companies that are just being born and trying to find their grounding.
He's the only one in the green, I believe.
Yeah. Man, I was thinking of just doing like a pretty much an all SaaS portfolio, but then I was like, there's still some good
I will
runners in the
say,
AI trade.
I will say this: this is
Mhm.
not a representation of you at all.
I
That's
know.
not how you invest.
Everyone was shocked by that. This is a competition. Like the only name
you.
in there that I have like a real position in real life is Iren. I don't have a position in.
Oh, you
I
got
do have a
service now.
No. I have a position in Molina. I have a position in ServiceNow. I have a position in Norwegian, and I have a position in Iren. But the rest, I don't have a position in.
I mean, this is just not representative how you invest. And then you look at mine. I feel like mine is like a perfect representation of how I invest. Like perfect.
And you're still down though. But
Yeah,
you're up on 4 at least of your positions, which is kind of cool.
like everybody throws.
Now, by the way, if you are into like software, companies around software, I think Chris, he really covers those types of stocks very well. And does really good due diligence around their debts and everything else. So Chris is a pretty good person to follow here. They're obviously going over their portfolio. This is their like a group portfolio that they came up with, that they're going through. So I asked it to list some software companies. Here are some of the largest publicly traded software companies and cloud infrastructure companies. Microsoft, Apple. I think Apple is one of those companies that has something hidden. I think they got something. It's going to be one of those companies that invested the least in AI, and yet they still happen to do just as good as any other company out there. While they are using Gemini at the back end, they are one of the only companies that take security so seriously. Despite the market yelling and screaming at them, why are you not investing in this AI infrastructure? They don't have to. They can use existing data to train their software. So, anyways, yeah, SAP, ServiceNow, Salesforce, really went over it. Let's continue.
Nebius, what's GFS?
Global Foundry.
Global Foundry. So his entire portfolio is AI.
Basically. Out of everything in here, the fact that Rivian is the only thing in the green.
That's kind of
really
sad.
Like Rivian is the company that's in the green. Like really?
That's really fucked up, but it's actually kind of funny.
No, I'm just saying, like, it's like really, like Rivian. Like I would have thought Honeywell would have been in the green, or Qualcomm, or Corning, or something. Like really, Rivian.
Yeah.
Oh my
Yeah.
God. Let's look at Mitts. He picked Apple again.
Yeah. It worked. He's up 9%
Yeah,
on
yeah.
it.
It's a great
Reddit.
company.
Everything else, Nvidia's down, GEV, Google is down, AMD, you know, Comfort Systems, SanDisk, it's down on Rocket Lab and Bloom Energy. So I think Amit's portfolio, if the AI trade works, I think
We
he's
got a
still gonna
lot
be
of
good.
time left.
Yeah, we got a lot of time, so it's still anyone's game.
And then Captain Sleepy Time. He's got a bunch of winners.
Captain Sleepy Time definitely did not lean into the AI trade, which is kind of funny because
He
he's probably
wanted to.
he's a bigger AI bull than we are,
Yeah.
but his portfolio doesn't reflect it.
Well, because I don't think he could stomach taking AMD. And Amit took Nvidia. I took Broadcom.
We did take a lot of the stuff that he wanted.
Yeah.
Really
We
just
took
to
away
fuck
his
with him.
toys.
But he would be down. Maybe we shouldn't have done that. Maybe
I
this is
mean-
karma. Maybe this is karma.
All right, guys. I think that's it. I am going to end it here. Let me turn my camera on. And we can just end it. I hope you enjoyed. I hope you enjoyed this session that we were able to have together. I kind of covered it all. I think that's what I get for not, for not covering the market as much as I would like. But yeah, I hope you enjoyed this video. Long video. I'm sure you didn't watch the whole thing, but if you did, I would be impressed. Thank you for joining me. I'll be dropping shorter videos, and I'll be covering. I'm gonna try to cover more and more of the market, what's going on. But yeah, thank you so much for joining me. If you're here, make sure you subscribe. Appreciate you for joining me today. Have a great rest of your day. Peace.